Guys, it was a circus out there. Man, I'm just glad that FOMC is done and it's passed. We don't have to worry about it for another 6 weeks. And we got the minutes, I guess, that'll come out in a few weeks. But nonetheless, FOMC, it's gone. They raised interest rates by 75 basis points. And why did the market rally on 75 basis points? Well, for one reason, you had Jerome Powell out there still trying to say that a soft landing was possible, that even though the runway is getting narrower, that he still thinks that he can land the economy with a soft landing. I don't think that I think that's beyond us at this point. The other thing that he did was he kind of dismissed the idea of raising interest rates by 75 basis points at the next meeting. Now, what's so funny about that is that's the exact same thing that caused the market to rally 125 basis points, or not 125 basis points, but 125 points on the S&P 500 at the last meeting that he did, when he says 75 basis points is completely off the table. What did he do at this meeting? He raised it 75 basis points. The guy is a clown. He's a moron. He is the most shameful bureaucrat, I think, that has ever served in the history of the United States. He is really that bad at his job. So the market rally, it's like, hey, fool me once, shame on you. Fool me twice. I don't know. Maybe they think it's still a shame on him. I probably agree with that. But here we go. We got a 2.5% rally on the NASDAQ today, 1.5% on the S&P 500, and we got 1.4% on the Russell. Did that change anything? Did that change this market outlook? The charts are definitely interesting. We're going to get into that. I'm going to look at the S&P 500 using the SPY chart. We're going to look at the Qs. We're going to look at IWM, and I'm going to look at the VIX, and then I'm going to take all your questions and charts, stocks. I'm going to look at them. I'm going to go through them one by one, as I do each and every week. So buckle up, gear up. Let's get going on this. Now, one of the things that I would probably say that was the most interesting about the today is how much we rallied. It looks like on the S&P 500, we rallied about 54 points. So that's about 1.5%. Now, last time we rallied 125 points. So a little more than double that. But what did we do thereafter? We gapped down the next day and sold off 10% over the next 6 trading sessions. So that is a significant move. And I'll be honest, that's something that I think caught everybody off guard, how enthusiastic that the rally was at the last FOMC. 125 points. That's like 3% to the upside. And then all of a sudden we crashed 10% over the next 6 days. I mean, it was like straight down. So let's look at the charts here. I'm going to show you that first off on the SPY. Check this out. This was the May 4th meeting. This was our last FOMC meeting. We went up and we went straight down over 6 days. We had a little bit of a move higher on one particular day, but even that day was sold off of the gap up. If you want to look at it from the 30-minute chart, pull that up as well. And you'll see right here, this was your FOMC day. I mean, it went straight parabolic right up into the 200 bar moving average for the 30-minute chart. And then what did it do? Again, I know I'm sounding like I'm beating a dead horse, but look at this. Next 6 days, just straight lower. 10% to the downside. I mean, that is so significant. So while we had a good rally today, I wouldn't say it was a great rally. In fact, in some ways, it was almost like a doji candle. I'm still short. I have a third of a position in QID and I have a third of a position in RWM. The trades in both of them have been great. RWM is a 1-to-1 inverse of the IWM. So it's not going to give you the kinds of gains that like QID, which is a 2-to-1 of the NASDAQ. And the NASDAQ has been leading the way to the downside. So that even further compounds the gains on that one. But, you know, some of my gains in QID have ranged from 8% to 15%, all the way up to 20% as I've been selling the profits in that particular trade. So now I'm sitting on about 14.5% in profits on that particular stock. And I was watching this 5-day moving average just to see where we closed relative to the 5-day moving average. If we would have gone out of it, and that's this yellow line right here, or if we would have closed above it, that's probably would have been my cue to go ahead and get out of it. So on the Qs, we were up above it intraday, but we ended up selling off just enough at the close to keep me in the trade. On IWM, we didn't even get close to a test. So, and both of them still, but I have been taking profits. Like on IWM, it's been more to the tune of about 5% that I've taken profits along the way to leave me with a third of a position at this point. So I am biased to the short side in terms of how my portfolios aligned. But if you guys have been following me for any time, I don't get married to my trades. I don't get married to my positions. I always expect the worst to happen. And that's what guides a lot of my risk management, is the fact that I do care so much about how I manage the risk on the trade, and it keeps me in the game. It's kept me through the dot-com bubble, and it's kept me through the Great Recession, and it's kept me through the sell-offs, you know, the European banking crisis back in like 2012 or 2011, whenever that was. And then you had the sell-off in Q4 of 2018 when you had the taper tantrum, and then of course you had the sell-off back in March of 2020, and now you have this sell-off, and I've survived them all, and pretty proud of that as well. And my goal is to always be profitable in any kind of a market, and right now I'm definitely doing that, up pretty well on the year. So seeing you guys coming in here, Victor, Ryan, welcome. Glad to have you guys here. Let's go ahead and dissect the SPY chart first off. Okay, so this has been the big support level. If you remember, I did a video on Sunday. If you guys didn't get to see it, I can give you a quick synopsis. I said there was a couple of bounce scenarios here. One of them's been blown apart. That would have been if we double bottomed right here on this chart. We were able to hold the lows, let's say at around like 387, 388, double bottom. We rally back up to like 417, perhaps break through it, and then test this declining trend line. This is the big declining trend line. We haven't tested it since late March. So maybe we're overdue for another run to that level before we take that next leg lower in the market. So that thesis has been blown up. But the next thesis that I had was the support level. This support level has been a little bit temperamental here of late, because you can see we've closed just below it for the last 2 days, and then we had the pop today. So I wouldn't say those were clean breaks of the support level. Instead, we consolidated, we broke a little bit below it, but we regained it today. So I don't think that the bears are out of the woods. The bears need this support level to go away. They need to break it hard. And so there's the potential, just as we have seen going all the way back to January, how we have managed to bounce off of this trend, off of this test right here. And then we had two more tests, and this was one that was a really good for me. I played QLD to the upside and made about 14% on that one, and then it's come right back down again. And so, like I said, I'm still in QID at this point, and what's the other one? RWM. So there is the potential for us to bounce here, maybe even take out this 417, 418 level and make that run back to 445. If that happens, that's a good move. That's about 20% almost, just even if you weren't even playing the inverse ETF. So there's the potential there. You want to be mindful of it. I'm definitely being mindful of it, because if it starts to run, I don't want to be staying in QID and RWM. So that's my synopsis with SPY. You also have this resistance level too that has been in play for quite some time, but I don't see that getting tested anytime soon. That's going to be basically if we make a good clean rally here and we can rally back up to this 411, 412 area. So definitely worth keeping in mind, but I don't think that's in play at this point in time. So SPY, let's go to Qs. Much more drastic of a sell-off in the Qs than any other of the other indices so far this year. And the Qs is going to be very similar of a chart to the SPY. Same theory. I thought, okay, maybe there's a potential for us to rally off of these lows here. So let's say it gets down to 286, 287, and it wants to bounce. That would be nice. You're going to have to deal with some resistance between 311 and 315, 314. But that got blown out of the water. Broke below it, broke below the lows. And so now the second thesis comes back into play, just like with the SPY. You have this declining trend line here in play. Now, you can see we've tested it on multiple occasions, and we've seen decent bounces each and every time. But this time, we haven't quite got there yet. You got a little bit of a gap there. So maybe there's a little bit further downside. We test it, and then we get that bounce. SPY doesn't sell off as much as the Qs when we're seeing a full-blown sell-off. So there's a chance that on SPY, you could still get a retest of this declining trend line as the Qs go to test its declining trend line. So that's a support level. It's yet to break on either of these indices. Now, the IWM is the most different one here. IWM has support. Check this one out. being tested right as we currently speak. So this is the daily. We can even look at it from a weekly standpoint. You'll see. I mean, this is about a perfect of support that's held so far. 1, 2, and then 3. Ultimately, I do think it's going to get broken at some point this year, but we have yet to break through it at this point, and we've tested it this week. This is the weekly chart. We've tested it just like we did in early May, and we've held our ground so far. So that's going to be a major testing point for Thursday and Friday in the stock market, and whether or not the market can eventually sell off. If it doesn't, then that becomes probably one of the better bounce opportunities in this market. You have to be mindful, though, there is a declining trend line off of the November highs that if that gets tested, you may be wanting to think about whether or not to take some profits off the table. So that's probably the one drawback on IWM, is that it doesn't have as much reward per se as like a QQQ does, where you could get a pretty significant rally for the Qs. Let's say, you know, we go all the way back down to 270 and we can go all the way back up to the 340 or even 335. That's massive. So we've talked about SPY, we've talked about the Qs, we've talked about IWM. Let's look at VIX. Let's look at the VIX. I can type it in right. We kind of have a hokey way of doing it on this thing. So the big resistance level on VIX, and you guys have heard me talk about this thing for quite some time. I mean, probably ever since I've been doing live streams. This which hasn't been long, but it's a pretty significant, this white line, a significant resistance level. And yes, we've closed above it a couple of times, like right there. We closed above it right here back in March, again in May, and we even closed again above it on Monday. But the one thing that happens, even if we trade above it, we quickly trade back below it. So it's a pretty significant. It's not a like very clean where it just touches it and immediately sells off, but it is a pretty significant resistance level that most of your market rallies, if not pretty much all of them, have started off of this slightly declining resistance level on the VIX. So I don't like to touch it at all. I don't want to like move it around because it has been very much a heavy level of resistance. So the FOMC, freaking Jerome Powell, man, can't stand the guy. I really can't. And I guess one of my screens went out behind me. I don't know what's going on with that thing lately, but Jerome Powell has got to be one of the most hated people in America right now. I can't stand him. And at least the people who follow the financial markets and really know what the role of the Fed is and how much they're screwing up this country. They raised it by 75 basis points. Just because he says he doesn't expect to do it next time is not something that I would take for granted. I would expect him to raise the basis points by probably another 75, maybe even one whole point. I mean, who knows? I mean, this guy, he doesn't stick to his words. He just word vomits all the time. And today, I don't know if you guys noticed it, but he seemed like he was on shaky ground there. He seemed very uncertain of himself. Didn't seem like he had his confidence and couldn't wait to get away from that podium. Hopefully that makes him realize, you know what, I don't want to do these pressers anymore. Let's just get rid of them altogether. I would love that because none of the reporters ask any real questions. So I would say Jerome Powell, he's so bad that if you took all the fiscal policy decisions that every horrible policy decision that every politician has ever done, and you combine them, I don't think that they would be as bad as what Jerome Powell has been for this economy. I mean, it's made it despite him. I mean, essentially the economy has gone up because he keeps juicing it. It's like putting steroids in the market when you're giving away all this free money. So, and hi to Alex, man. Glad to have you on board. Yeah, keep shooting me your questions, your charts, anything that you guys want me to go over. I will go over that. I can see we got Bitcoin coming up here. We got TLT, IEF, and Ryan has a question about stop losses there, stop losses and how long I hold them. So I'm going to get to that right now. So Ryan Fairchild asks, how long do you usually hold leverage ETFs? Days, week, aside from a stop losses, can you explain a little bit about them? Thanks. Okay, so he doesn't want me to talk about the stop losses, but yeah, I can definitely talk about them. What I'll do is I'll go to the QID. This is a good example here of a trade that I recently made on the market. So we had this. Well, let me back up. So when I do like a leveraged ETF or even just a one-to-one ETF, I base it off of whatever symbol it's trying to imitate. So for the QIDs, it's trying to do an inverse 2-to-1 of the Qs. So I'm going to base it off of what the Qs are doing. So we had this consolidation for about 8 days on the Qs. This consolidation period, I could probably, let me draw a box because it does a little bit better job. This box contained price action very well. I told myself, I'm not going to get long on the QID unless, and I had this trade set up out there for probably a solid 6 or 7 days, or maybe even 8 days, unless it can break down below this box. I'm not going to play with it. So Thursday of last week, we got that action. So you go back to QID, you can see it broke out. That's where I got long at. And then the rest is history. Yeah, last 2 days we've had a little bit of a pullback, but nothing too problematic at this point. I've been taking profits all along the way. I took some profits here, took some profits there, took some profits along the way, like I said. Now, how long will I stay in it? Well, if the trade doesn't work out, I don't want to be in it very long. I mean, probably a max week that I want to be in an ETF that's not going anywhere or working against me. I also have my stop losses, obviously. So for QID, I can't remember what the exact stop loss is without pulling up what I've had it at, but I think it was like somewhere below this level right here. So 2170. Actually, that was the correct stop loss. 2170. Stop loss entry of 23. So if it would have broken below that, I would have been out. But it didn't. It kept shooting higher, and so I don't want to stay in a losing ETF too long because it does work against you over time. Tight stop losses, it'll usually force you out pretty quickly. And that's what I do. I have tight stop losses. I want to know quick whether or not I'm going to be right on, or wrong on the trade. Now that I'm in QID, I hope I can stay in it for another month. I mean, if I can stay in it for 2 months, that'd be great. I'm not expecting to. Wouldn't be surprised if I was out of it by tomorrow or Friday. I mean, that's just, these things move very fast, but especially in this kind of a market. However, if I can stay in it longer, I'll stay in it longer. As long as the stock's winning, I'll stay in it as long as I possibly can. But I would say on average, a winning trade on the ETF is probably going to be anywhere between 4 to 5 days to a couple of weeks. A losing trade on an ETF is probably going to be 2 to 3 days. I mean, if I was guessing. TLT. Let's look at this one. Good question. All right. What do we got with TLT here? Man, you got a lot of chicken scratch though, right? So you had this big trend line here. This didn't hold. That was one that I was looking for a potential bounce from. Never did hold though. So you also have some declining resistance. Let's be mindful of that. Nowhere near testing that. You also have some declining support. That could be in play in the near future. Maybe we see like 105 on TLT. You also could say you have, I'm just giving you a whole bunch of different scenarios here, a support level that was definitely broken. So let's clean this up a little bit. Let's get rid of that one. We don't need that. This isn't going to be tested anytime soon. So let's forget that. Weekly chart, maybe easier to view. How far back does this support level go? Well, there's some adjustment right there. So let's get rid of this one here because I don't even think that's the most relevant support level. TLT. And so you're kind of seeing how I'll dissect a chart there. I like to look at it from different time frames, whether it's intraday, daily, weekly, or even monthly. In this case, we're looking at it from a weekly because you can see going all the way back to 2015, there's some big support levels in play there. So right here is a critical support level that you can play. So if I was looking to play the bounce in TLT, and I don't necessarily consider myself a bond trader or somebody who really enjoys trading that much in bonds, but the trade setup would be a move below 108. So you got about 2.5%, a little bit more than 2.5% on downside, with a potential for a gap fill at 113, and maybe another move up to 119. That could be a short-term move that you could get out of this market. But yeah, I think that's probably the play there in TLT. IEF. Probably like the same kind of a setup there. Let's see if this, nope. That's why you got to chart it. IEF, I don't see as good of a trade setup there because it's broken below, as of this week, below that key support level. Yeah, I don't like that one as much as I do TLT. I'm going to skip down here a second, just highlight something that was said here. Oh, let me move my face up so I'm not getting completely forgot. By the way, you might not have been able to see this, but on TLT, that was the support level I was talking about. I might have been covering it up with my face there, but TLT, this is a support level that goes back to 2015, and so far it's holding. So IEF can't say the same thing. So what could JP have said better? He probably should have raised the rates. Regardless of what the market response would have been, he should have probably raised the rates. 1% last time, 1% this time. Really get aggressive. I mean, what are we at like right now? 1.75 on the Fed funds rate, and we have inflation at 8.6. I mean, he's so behind the curve, it's not even funny, and he just thinks doing these incremental raises. Oh, but look at me, I raised it 0.75. That's not going to do anything. I mean, probably should have raised it 2%. I mean, of course, he's never going to do that, but he's got to catch up. And then the other thing is he shouldn't have waited till now to do that. He should have followed through in 2018 when he tried to start tapering, when he's tried to start raising rates, but when the market threw a temper tantrum, similar to even to a lesser extent to what it did this year, he flipped out, he backed away, and he says, forget it, we're not going to do that, we're going to pause the rates, and then he started quantitative easing again, pretty much. So, and then the other thing that he could have done better is not to intervene in the markets during the 2020 sell-off. Yes, the economy was shutting down, but that was kind of self-inflicted too. He wanted to be the hero. He was the hero, but now we're paying the consequences of it because he injected so much free cash into the market through everything that they did. And now we just got a whole mess on our hands. So that would be what JP could have done better. Just not do as much. Let the free markets reign. Good question, though. Next question is, what do I think about support on Bitcoin? So let's flip over this chart right here. So Bitcoin's one of the things that Bitcoin does a pretty decent job with is following the rules of technical analysis. I mean, it trades around the clock, so there's not like the big gap downs or anything else. And by the way, what am I drinking? Check this out. Buffalo Trace. Now, good stuff. I've drinking a couple times on this podcast, not podcast, but live stream. Look at this freaking, let me see if I can get in the camera there. Look at that. It's a massive, massive thing of Buffalo Trace. Found it at Total Wine the other day. We're taking out the boxes. I'm like, I need that. So good stuff. Buffalo Trace, if you haven't had it, it's kind of hard to find it in most places. I wouldn't pay more than like $25 for it. Honestly, I wouldn't. If you have to, maybe $40, but I wouldn't go over that on the secondary market. All right. The double top has been forming on Bitcoin for quite some time now, right? This one here, first top, second top. We mentioned it a number of times on this live stream. Then you had the bear flag. Held this bear flag pretty well, and it kept thinking, all right, we're going to bounce back up to maybe 50,000. Didn't, broke through it. Then it became a retest of this major support level here. We've tested it, and we held it for quite some time. I mean, if you look at it, I mean, that goes back to about a solid month where we held the support level before finally breaking down. So now that it's broken down, where does it go from here? That's the big problem, because when you have these big run-ups like what you saw here with Bitcoin from October of 20 all the way till like April of 2021, everybody likes it, but there's no support being developed along the way. And that's the problem with a lot of your stocks right now, is that there's not a lot of support underneath. So there's just this complete free fall because it's trying to find a support level where it can find some buyers that are interested in buying it, because that's been a psychological level to buy in the past. There's no psychological levels to buy right now. So where could it go to? Now, people kind of gasp when I say this, but there's really no support levels outside of 12.4 thousand. This is about the closest thing to a support level on about 12.2. Let's just say 12,000. This is your support level on Bitcoin. Nothing else is near it. You could say, maybe, Ryan, this little support level right here could offer up some support at 19. Guys, that's like a one-off kind of support level. The best support levels are those that have been tested like multiple times. Multiple times it's been tested and it's held, or it can act as resistance as well. That can also create support on an underneath basis. But yeah, this would be the support level I would look for it to come back down to. People think I'm crazy, but if you look back on, I can never remember how this works on TC, or not TC2000, but this is the trading view. I'm trying to zoom in on this little period right here, but nonetheless, this one here did the same exact thing. I mean, I remember when we were trading at like, what was it, like 20,000? and it was breaking down. I thought, man, I think there's a good chance for us to go back down to 6,000. It did. It went all the way down to like 2,000 or 3,000, in fact. So yeah, don't discount the fact that Bitcoin can get very, very ugly. It's still a very crypto is still in very much the early stages. It hasn't yet been regulated. What that's going to do to the cryptocurrency market, who knows? But it's going to be something that the federal government's going to want to control or have some kind of influence on. Alex asks, based on your past experience and your understanding of the present, how do you expect the upcoming midterms might influence the markets into quarter 3, quarter 4? Markets don't like it as much when one party has all the power. I mean, we've seen that so far this year, and I'm not trying to make it a Republican Democrat thing. I'm just saying that, you know, Democrats control all the houses, and we're not seeing much out of the market. But when you have a Republican chamber or a Republican president, and you have some Democrat controlled houses or whatever, it's a mixed government, or, you know, where you have both parties controlling some parts of the government. The market tends to like that a little bit more because there's less to worry about. There's less new legislation. There's more predictability, and the market likes to be able to look into the future and be able to predict. So I don't have the midterms as a big, you know, red flag for this market right now. I think that the whole issue is going to still be throughout the rest of the year. Inflation and what the Fed's doing about it. You may have some more stuff that comes about with the conflict overseas, but that's about it. Yo, Barry Sycamore, what do you think about Amazon? Let's go ahead and look at Amazon here. So get back to a daily chart here. Triple bottom on Amazon. So 1, 2, 3, nice little run up here into that stock split. Pretty much marked the recent highs for that stock before pulling right back down to this $100 level, $101 level. So you have the triple bottom there. Big day for it today, up 5%. You also have some support. Make sure I can find it here. Right there. See that big, massive support level on the weekly chart? You can see it a little bit better, but huge support. Let me just move my freaking mug here. There we go. That's a little easier. So big time support level. This is going back to 2018. And so far it's holding with a triple bottom. So that's kind of nice. I like that. If I was thinking that this market was going to bounce here in the near term, Amazon would be one of those that I would play, because I think that you can manage the risk fairly well with it. I mean, you can put a stop loss below 100. You can get in at current prices, and you can see if it can go up to like 150, 160, you know, especially if the bounce can last for a couple months. So far, our bounces are like a couple weeks. Good chart, man. Hey, Ryan, I've been listening to the podcast since I started trading 3 years ago. Wow. Thank you for being a 3-year listener of the podcast. So can't tell you how much I appreciate you there for that. Thank you very much. And Alex wants an update on Apple, and we're good, and corn. So check that one out. So Apple. I swear, I feel like my mugshot gets put in the middle of all this stuff. Keeps getting in the way of all the price action. So you got a pretty big, significant support level right there. So far, it's holding this support level. You also had another one. I'm trying to remember where I drew that sucker at. Oh, yeah, right here. This one broke. So you're kind of stuck in between two different support levels right here. You have resistance above. Couldn't get through that today. And then you also have a support level down below that it's not breaking. So let's assume that it can break that support level. Then you have somewhat of a head and shoulders pattern. And I'm just noticing that right now as we're talking about it. But yeah, left shoulder, head, and then you got the right shoulder. Will it confirm to the downside? If it does, there's a lot of room for this thing to fall. So you could get down to a potentially, you know, maybe another 30% drop or 20% drop. Not in like the here and now. I'm just saying, if this thing continues, remember, the average recession lasts about 289 days. That would put us into about October 22nd of this year, which means that we have, if that's the case, if we're just an average bear market, that puts us about another 4 months of downside for this market before we finally hit a bottom. And obviously, average means it can be earlier, it can be later, but that's just giving you an idea of how long these things can last for. But you do have a head and shoulders pattern that has formed, especially with that bounce off of the May lows, created the right shoulder. So now it becomes a question of whether or not it wants to confirm. And then you got corn. Let's see here. Let me just pull up my last analysis on it here. Yeah, I mean, it broke that trend line there, so that wasn't the best thing in the world. Then you've got this other existing trend line where you got multiple price points being tested on there, but it hasn't really gotten separation off of it. So that's going to be the big key for it going forward. Obviously, a lot of the stuff going on with inflation and overseas problems, that's going to help out corn prices continue to go higher. Looks like you had a little bit of a head fake right there going back in May. Or you could just draw the trend line a little bit higher there and say, okay, if it really wants to get moving, it needs to break above this 29.60 level, currently trading at 28.65. Needs to continue to hold this rising trend line, though. Let's see what going a little further back. I mean, further back, you could see downside where it could come back down to 24. Let's see here. Do you keep track of European markets and Asian markets? Can other markets provide information of where the U.S. might be moving towards? Yeah, I mean, depending on if there's like a crisis over in Europe. I remember like the European banking crisis when that was going, just, causing all sorts of havoc in the market. Everybody was worried about what the overseas markets were doing. I've seen it where the Chinese markets have wreaked havoc on the U.S. markets, and we all care about what the Chinese markets do every night. So it really just depends. I don't think the market cares as much right now about the European markets. I don't think it cares about the Asian markets right now as much as it just does about inflation here in the United States. Any take on Phantom? Is this a stock? Yeah, okay. Oh, I don't think that's a stock. That must be like a crypto. What are we talking about on Phantom here? I can't find anything. So flipping back to BTC, he was talking about, let's see, on the weekly, it's touching that 200-day moving average here. So that should be, trying to find it here. All right, I'm not going to try to remember how to use all these things when I'm doing this live, but yeah, I have to do that one next week. Let's see. Top left for my mug. I could probably do that next time. Let's do that next time. I'll put it up there. So, guys, crazy times we're dealing with here. It's really tough. I mean, even today, I was like, man, I think I'm going to get knocked out of this trade here with QID and IWM or RWM if it breaks above that 5-day moving average and closes above it. It didn't. It had a little bit of a sell-off. There's been times where I've gotten suckered into go ahead and getting out, and the market comes right back down, and I miss out on the additional gains that I could have had on those short positions. But nonetheless, it's tough. It's always going to be tough. It's always going to be a very difficult market to succeed in when you're taking too big of a position sizes, when you're not taking care of risk on the downside. You have to make those a priority in your trading. And if you do, you'll find that trading success. Good session with you guys. Make sure to subscribe and like this channel if you guys haven't done so already. You guys are great. I really look forward to these Wednesday live streams, man. It's great to hear what you guys are thinking, what you guys are looking at. I come up with a lot of good trade ideas off of y'all's input. So keep up the good work. You're helping make my job easier as well. And let me know in the comments if you guys have any questions. I'd love to hear about it. And check out the YouTube membership. You're going to get all my stock market research each and every day. That's going to include updates on all the main stocks, plus Microsoft and Tesla. You're going to get updates on all the indices, my weekly watch lists, both bullish and bearish stocks, and the list of stocks I'm looking at each day from a daily setup standpoint, and the most intriguing charts of the day. So check that stuff out. And Lunar had questions about DWAC. We'll close with DWAC here. I did a video on this last night, by the way. Definitely worth checking out, but nonetheless, we can look at it here. I would not be excited about DWAC at all. It broke like 33. That was the key price level. Right now, you had a dead cat bounce today. I would not play this thing. It's just too difficult of a trade to make. I would stand aside. If that's just me, though. Everybody has a different path to success in the stock market. I'm just giving you guys mine. All right, guys. Y'all take care and God bless.